Hey yo. Hello everybody. How's it going?
Are you? It's a beautiful song.
It's called the Welcome to the Show song.
You're in a good mood today.
I don't know why.
I don't
it's not
know
like
either.
Bitcoin's breaking out to new all-time highs. Hey.
Woo.
As you predicted almost exactly 2 shows ago.
Oh yeah, I don't mean to brag, but I guess I do win the Dogecoin.
Well, you did say, I think you said April 15th. It's April 13th. So
By April 15th. I think what were we doing? It was like The Price is Right, where you can't go over, but you can whoever's the closest under.
No, it had to be exact. I'm sorry.
Oh, okay.
I believe it did need to be exact.
Well, you're the Dogecoin whale,
Bitcoin
so
belong to me.
I don't have any more.
Yeah.
I'm out. Hey, what's going on, everybody? Welcome to We Talk Money. I am your host, Chris Dunn. I'm here with Nikki,
Hello.
certified financial planner, and we got Travis, stock investing geek, former hedge fund evil man, coming over to the good side.
He's from the dark side.
Yes.
Get him.
He's like, why manage billions when I can just hang out with Chris and Nikki all day?
Yeah.
We're way more fun.
Yes.
Yeah.
How's everybody doing? Welcome. Hey, guys. Yeah, I don't know. I guess we could just jump into it. I see we still have a lot of people coming into the live stream, but yeah, let's just go ahead and jump into the charts. I guess the big news today is crypto is continuing its epic run here in the first half of 2021. We've got Bitcoin that broke out above the 60K zone. We've got Ethereum that is breaking out above 2,200 bucks. And believe it or not, on the leaderboard today is Travis's trade.
What is going on with Doge?
I don't know. Things are weird when you've got like Ripple and Doge and some other shit coins at the top of the leaderboard on the day. Like we call this popcorn season, right? Where on different days, random things are just popping off, right? And
I feel like everybody's moving out of like the crazy stocks into the crypto, and that's like Doge. All the TikTok investors are maybe just trying to figure something out with their lives, and they're going to these coins.
Well, all the stock traders, I mean, when I say stock traders, I mean like the guys and girls that try to trade like penny stocks and stuff. I think they realize like, oh, you can actually make more money in crypto than trying to day trade stocks. So yeah, I do feel like we've gotten a wave of that this time too. Yeah. What's up, guys? Yeah, seeing everybody saying, hey, just want to make sure our audio's good. Let us know if the audio sounds good. I think we're solid, right, Kevin?
How about you, Trav? Can everybody
I'm the one
hear
we have
Trav?
to worry about, right?
Yeah.
Check. I think we're good.
Yeah, we had a little gremlin sneak in the studio last week and unplug Travis's mic.
Yeah.
Cool. All right. Well, looks like we're good. So, let's just go ahead and dive into the news and the charts, and then we'll answer you guys' question. And obviously, before we get started, we'll just have to say we are not financial advisors. This isn't financial advice. Please don't blindly follow anything that we do because we don't know your personal financial situation. This is just what we're doing. So, yeah, let's go ahead and get kicking. So, yeah, Doge, I guess, is what we should all be buying right now.
I'm not gonna lie, the actual chart, the price chart looks pretty damn good.
Yeah.
Like if I was like wanting to trade this, I'd be looking at the breakout in the next few days.
Send it.
Yeah.
It's crazy.
Crypto Hustle made a ton of money on this. For me, I don't know. I like to get in at breakout levels, right? So who knows? Maybe this will be my first
Are
trade
you
of the year on
going
this.
to trade Doge?
I don't know. The thing is like I am so heavily invested right now. Like I had peeled back like 15 or 20% of my crypto positions. What was it, last month or the month before that? And then like right now I'm like right back to over 95% invested because we've just got so much stuff popping off. Like I've had I can't even remember how many breakout trades over the past month. And like some of them have worked right away. Some of them are still consolidating, but it's just a beautiful market environment where we can trade these altcoins with the goal of stacking more Satoshis.
Mm-hmm. It's just really funny how the quote goes, nothing to change sentiment like price.
Yes.
And it's almost like this is a self-fulfilling prophecy, price held up, we're retesting the breakout. Now it looks like it's going to break out. People are probably going to buy it because it looks like it's going to break out.
Yeah.
You know, even though
momentum begets momentum.
Got Papa Elon behind it.
Hey, that's right. He's taking us to the moon. So I don't know. So this is, so just to kind of zoom out though, I always like to look at the big picture and just think about what's happening. You know, we talked about this over the past couple of weeks, but this is now Bitcoin's 7th straight green month in a row. I don't think that has happened in the history of Bitcoin's price. There have been 1 or 2 times where we had 6 months of green, but never before have we had this percentage run or this amount of capital growth on the market cap. It's something very, very interesting. And I was almost thinking like it would be better if in April we actually had like a red month, which still could happen. We're not even halfway through the month, but you know, as of right now, we're kind of peaking up above the 60K resistance zone. And so my thought is now is like, okay, are we about to go parabolic to 100K, or is this going to be a little trap and then more consolidation? I don't really know. I mean, I added on the breakout here with tight risk management, but obviously, I went heavy down in like the 10K zone, and just kind of traded in and out of the trend on the way up. But the higher we go, the riskier things get. But this is why it's so hard, if not damn near impossible, to pick tops, and why I don't try to just short Bitcoin at my profit targets. I just kind of scale out and let the thing ride. Because one thing I learned back in 2013 and then again in 2017 is never underestimate what crypto can do. Like it can go much, much further and get much more insane than seems rational. So, but on the other side of the coin, you've got to always be in the back of your mind thinking about risk too. You don't want to get overextended.
Yeah, and we've talked about this a bit, but quite a bit actually. But the thing that's different in this cycle from the last cycles of Bitcoin is that we have a lot more institutional investor participation and involvement. And so institutional capital has been flowing in. So that's obviously helping here. And it was interesting. I was looking at the Coinbase S1. We'll talk about Coinbase, obviously. But Coinbase, obviously, doing their direct listing this week and going to be a publicly traded company soon. But their S1 document, their IPO document, essentially has a chart that shows institutional revenue versus retail revenue for them. And institutional revenue in Q4 of 2020, I believe, was actually higher than the retail revenue.
Interesting.
So they are seeing a pretty significant increase in the amount of institutions, hedge funds, corporations, financial advisors, et cetera, that are transacting in crypto on their platform.
Hell yeah.
I feel like it's been this perfect storm of institutional investments coming into Bitcoin. And then you even have the stimulus that caused a lot of people to have some money to be able to invest too. A lot of retail adoption. People have been a little weary to invest in Bitcoin for a while now. And now it's like this mass adoption that's happening, and everybody's talking about it and thinking about it more so than in 2017. And a similar thing is happening in equities, where we've seen fund flows into equities, or fund flows into funds that have been extraordinary over the past 5 months. And I think we were going to touch on this, but it's a similar concept. We're just seeing so much money coming into the markets.
Yeah. And if you look at the on-chain data, you can kind of tell that institutions and a lot of the big block buying is being pulled off exchanges and like probably not going to return for a long time, right? Like the people that sell the quickest is typically retail traders, right? That buy high and then they have to flip sooner. But yeah, right now the data is suggesting that we have a supply problem and Bitcoins have just been getting sucked off of exchanges, at least centralized exchanges. Now, kind of the counterbalance to that is we have seen a lot of that value getting diverted to DEXs and lending platforms and yield farming stuff and automated market makers like Uniswap. And so that could come back to the Coinbases and Binances of the world when selling starts to happen. But as of right now, it looks like the majority of it is going, like you said, Trav, to institutions, which is not going to come back anytime soon, and hardware wallets, and then also other lending platforms, people trying to avoid taxes by doing things with stable coins and trying to find yield by not just putting dollars in their bank account, but trying to generate yield through different lending platforms. So Interesting times, man. It is different. Every cycle, you know, the trader and the market participant pool becomes more diverse and larger and more solidified that this is not going away. It's not a bubble. You know, all those narratives from 2013 and then 17 have continued just to get steamrolled. And this is sustainable growth. And now I think with Coinbase's IPO, it's like the cherry on top, man.
So let me ask you your opinion on whether this Coinbase direct listing is a buy the rumor, sell the news event, meaning is this going to be the moment at which the euphoria peaks and then it starts to trail off a little bit, maybe, I don't know, short term, medium term? Is it something that you think, because I think a lot of people are expecting that this is going to be a further rocket fuel to what's happening in crypto.
Yeah.
But I've seen a lot of these situations where the big event that people have been anticipating actually ends up being the peak.
Yeah, and that's exactly what happened in 2017 with the CME futures launch. It was like there were a lot of people that were like, oh, Wall Street's coming in and they're going to pump our bags. Well, the exact opposite happened. And to your point, the listing day for the CME Bitcoin futures was the 2017 top. They created the top. And so, yeah, I've been thinking a lot about that. I don't think, I think the Coinbase listing is just one of 100 or more variables in this whole pizza pie that we have of the crypto sphere right now.
Yeah.
It's definitely driving hype. I think what it's doing, though, is more on the institutional side, it's giving more legitimacy to crypto. And where it used to be a career risk to invest in Bitcoin, now it's a career risk not to invest in Bitcoin. Like, think of all these fund managers. If they, you know, a few years from now, Bitcoin's at 6 figures or more, and they haven't invested, they're going to be the uncool kids at the party. You know, where before it was the rebels and the weirdos investing and it was unsafe for Wall Street to do it. Now, if they don't do it, you know, I don't know. What do you guys think as being a CFP and a former hedge fund evildoer?
No, I mean, there's I know we were going to touch on this. It was Tyrone. He's spearheading this company called Onramp Invest that helps financial advisors be able to custody Bitcoin for their clients. And this is pretty big.
Yeah, what is this survey that they were showing?
It was a survey showing that only 3.5% hold Bitcoin with their advisor, you know, somehow.
But like, so call it like 3/4 of people, like 73% would move their Bitcoin to an advisor.
Could. Yeah.
But only a small percentage of them are doing that now, obviously, because there's not really feasible ways to do it.
A, it's not as simple to custody it, and B, it's mostly risk. A lot of advisors are just a little bit weary to recommend it or put it in a portfolio for their clients because the education isn't there. So they're focusing on educating advisors about crypto, how to safely custody it and deal with it, and how to work with it in a portfolio in terms of risk management. And so the education, having the platform to be able to actually work with crypto for their clients is big. My question was going to be on this to you, and this is just one of the doors opening up, right? Like you've said, financial advisors, institutional investors, blah, blah, blah. How do you feel about, I feel like most people that have crypto, and I know this survey says that most would move it, but I feel like most people, do you think that would make them feel uncomfortable? Would most people want to maybe still continue to hold their own crypto? Or is there a huge percentage of the population that would love to just offload it and not have to think about it?
Yeah.
You know?
My guess, and I'm going to throw out a number here, I could be wildly wrong, but my guess is that the mass majority of people, your average mom and pop that has a regular job or runs their own business or has like, a family and isn't in the markets full time, they don't want to have the risk of self-custodying their own Bitcoin, right? So my guess is that the mass majority of people would be like, I want to own Bitcoin, but I don't want to have to worry about private keys and hardware wallets and getting hacked and all that shit.
I think I 100% agree with you. And obviously that coincides with what we've seen the survey say.
Yeah.
But yeah, it's just really interesting stuff what they're doing. And, Tyrone is really trying to get the word out there for advisors that crypto's there.
Yeah. What do you think, Trev?
I like this effort. I just wonder if it's irrelevant once the ETFs get launched, which again, I think we are all anticipating Bitcoin ETFs in the US at some point.
But isn't it kind of the same as gold? Like if it's not your gold, it's not, if you don't hold the gold, then some people want to hold the gold versus having an ETF. Could it be the same idea here with crypto?
Yeah.
For some people, I think it will be.
Yeah.
I mean, we saw what happened to gold's price when the ETFs came out, right? That spurred a multi-year bull market. But yeah, there's two groups of people. There's people that are like, I understand what Bitcoin is and why it's important to hold your private keys. And other people that are like, I'm just too lazy, or I just don't have the time or the mental bandwidth to think about it and take on that risk. So yeah, let's talk about the... tomorrow, the big event. Coinbase is basically going to open at $250, which is going to be a $66.5 billion valuation.
They probably will not open at 200 and
do you guys, so is this high? Is this low?
Valuation. It's a direct listing, so we don't know what the hell it could open at whatever. We don't know. But I doubt it's going to open at 66 billion. If I had to take a guess at it, we can make a bet.
Yeah, maybe. Here we go. Let's have another bet. First of all, before we make our bet, let's talk about, maybe you guys can explain the difference between an IPO and a direct listing and pros and cons. And
take it away, Trav.
Typically in a direct listing, the company itself isn't going to be raising primary capital, and they're not working with investment banks to then therefore like place new shares with institutions. So what happens is typically a Dutch auction is how a direct listing is done, where there are some bankers that go figure out, you know, they have the initial reference price, but when the thing's ready to actually trade, they go and figure out like where the weighted average of demand, where the weighted average price sits with the most demand. And then they essentially let it start trading, and employees and insiders may actually be able to sell. I'm not sure. I haven't looked at the restrictions, the lockup restrictions on this, but in some direct listings, some amount of the employees and insider shares can actually be sold immediately in the direct listing. Whereas with a traditional IPO, you're going to have a 180-day traditional lockup for the insiders. And so, yeah, so there's a couple big differences are the company typically in a direct listing doesn't raise new capital by issuing new shares. It's just taking the existing shares and allowing them, at least some fraction of them, to be publicly traded. And then also the way that it's priced is not a bunch of banks deciding that what price, you know, they're going to give these institutions. It's a Dutch auction where people put in bids, and so the price is more market determined.
Yeah. So I get the benefit for the company, right? If employees and insiders can dump their shares right away, and maybe it's cheaper and faster to do a direct listing than a traditional IPO. Is there any benefit for individual investors, or does it not really matter?
You know, theoretically, direct listings can mean a little bit less volatility and a little bit less of that one-day massive pop. And so if you are looking to get in as an individual, sometimes in a direct listing, you can actually get in at the, you know, initial direct listing price or close to it. Whereas a lot of traditional IPOs, the bankers underprice it on purpose so that their clients get a massive, you know, 50 to 100% pop on the first day. And therefore, retail traders are buying it at a 50 to 100% markup from where the IPO price was set.
No way Wall Street gives their clients a benefit over retail. Tell me that's not true, Travis.
Yeah. So
democratize IPOs.
Yeah.
Yes.
So direct listings are good for the company in the sense that, you know, they're not underpricing their stock, and retail investors can get in typically closer to the initial trading price. But, you know, this isn't going to be like a massive discount deal, I don't think, because my guess is the valuation of the company, like my guess is that the share price, once it actually starts trading on direct listing day, is going to be probably north of $500 a share. Coinbase has about 250 million fully diluted shares, so that puts it at basically 100 billion plus of valuation. And you know, we can look at their numbers, but that's a pretty big market cap.
Yeah, because according to this article, it says that the $250 price point is 27% lower than the last private secondary market trade, which was at $343 a share.
Yeah, and there are other, you know, shadow exchanges like FTX and stuff that are actually having reference prices of like $600 per share that Coinbase is trading hands at. So
okay, let's do it. So let's make a bet, and winner gets what? Winner gets a free first-class flight somewhere. I just want to get on a plane so bad.
So what price are we talking? The very first trade of the day, or the price that it ends the first trading day at?
Nikki, you choose.
Are we go? I was gonna go market cap at the end of the closing price.
Okay, I think that's fair, right? Because who knows what the open and what the first hour is going to look like. Let's do the close of the regular trading session.
Market cap or price of the shares?
Well, price of the share.
If you do market cap, then we'll just divide by 250 million
Okay.
to get the price per share.
Yeah.
Okay.
So yeah, you choose however you want to do it. And guys, what do you think? Everybody throw your answer in chat.
God, I was thinking at least 100 billion. At least. I'm thinking like it could close at 150 billion.
Okay. And what is that? Divide 150 billion
So
divided
that
by?
would basically be. I should be able to do this math. That's $600 a share.
Okay.
Okay.
I'm going to say 725.
Okay.
Oh.
Wow.
I'm thinking we're going to see FOMO tomorrow.
Wow.
Especially
Wow.
with Bitcoin breaking out. Now, will it stay up there and then collapse? I don't know what happens after the first day, but I'm going 7.25.
All right, so I'm actually going to take a slight under here at 550 per share, just because that still puts it at a pretty high, like 130, 140 billion dollar valuation. And what I've noticed about direct listings is they often have less of a pop on day one than you anticipate.
Okay.
Of course, this is Coinbase.
See,
Yeah,
you have
and it's
an
crypto.
edge here.
And it's crypto.
Yeah. That's why I'm like, okay, things could get stupid. I'm going to play the out of the money, like long shot.
And I actually think intraday price could get silly, but I think it will, hopefully by the end of the trading day, be 550, 600. More like 550 is my guess. I'm taking the under.
Okay, 550.
7.25.
7.25.
And you are
600.
600. All right, we'll
Closing
see.
price.
We'll see who gets
Winner
the flight.
gets a first class flight.
Yes, yes.
Okay.
To where though? Because first class
Yeah, to
flight to
where?
Atlanta is very different than a first class
gonna have to
flight
cap
to Japan.
$5,000 max
We'll
price.
figure
I don't
that
know.
out.
Yeah, I just want to get on a flight. Will somebody buy me a flight somewhere? All right.
Someone said 500 billion.
Wow, that would be something.
That would be nuts.
something.
Okay.
But hey, nothing surprises me in this environment.
That would make it one of the top 10 largest companies in the world. Well, in the U.S. markets, maybe not in the world.
Yeah.
Yeah, in the US market.
The odds of it getting there on day one are kind of crazy, but
Yeah.
all right. Well, let's move on. So we talked about Coinbase.
Oh, well, we didn't talk about if we're buying it, though. And
Oh, yeah.
everybody wants to know that.
No, well, let me ask you guys, because I'm almost fully invested right now. So what about you guys?
I could make a case for Coinbase at a valuation somewhere between like 50 to 100 billion. So for me, unless it prices, at like 60 billion, the $250 reference price or somewhere around that neighborhood, I'm probably not going to be a buyer on the first day.
Yeah, but you don't really ever buy IPOs anyway, right? Like
Very
on the first day.
rarely. Yeah, very
Like who
rarely.
does? Like why would you buy that on a first day without real price discovery?
I guess if ETFs do, certainly like some ETF providers want to get that company in their ETF. There's,
true.
So there's some more passive buyers, and there's a lot of retail investors who don't think about market cap or valuation. They just want the stock in their portfolio. So day one, there are a lot of traders too, but
Yeah, trading the Momo.
momentum.
So are you going all in, Nick?
YOLO to the moon. No, I am in a similar boat as Travis. I kind of had the 50 to 100 range. 100 was pushing it, but I guess in between 50 to 70 billion.
Yeah.
Maybe take a nibble.
Okay.
The thing that makes the valuation exercise on Coinbase difficult right now is that their numbers are up so much, and we're in such a bullish part
Exactly.
of the crypto cycle. So on the one hand, you're like, yeah, the numbers are probably a little bit high right now relative to like average through the cycle. But then you also think about longer term, they can probably still grow given all the products they're still adding to the platform. So it's like you probably have this situation where it's a local top in terms of their financials in 2021, maybe, that's my guess, and then maybe a little bit of a normalization, but then longer term still some upside. So how exactly do you think about pricing that? And then it's a game too of, well, what are other investors thinking and anticipating, and are they going to sell this thing off when the numbers do start to normalize, or Is it just going to keep ripping? So like,
Yeah.
it's a weird game of figuring out what everyone else is thinking and how they're going to anticipate and react to changes in their financials.
Which makes it just really hard to find an edge, right? Like, I guess the best quote unquote time would be if, say, we went into a bear market in crypto and, you know, they don't necessarily have to make less money during a bear market if people are still actively trading.
True.
So I don't, you know, we'll have to see how that plays out. But what I would like to see is like, if Bitcoin, you know, did crash and, you know, volumes kind of dried up or something like that happened and it got to a valuation where it's like, this is too good to pass up, then maybe that would make sense to put some capital in there. I mean, I've always said, like, I love, like, as far as tokens go or just tradable assets, like crypto exchanges are awesome. They're just cash cows. Like, they just get a piece of everything, right?
Coinbase has like 40 to 50% adjusted EBITDA margins.
That's insane.
Nuts. Yeah, they're like about almost, I think 30 or 40 cents of every dollar of revenue becomes free cash flow for the company. It's wild. Man, it's wildly profitable.
Yeah, YEC, I think they were launched out of there, and man,
Any early Coinbase investors have, with that one investment, you know, made their funds multiple times over.
Yeah. Post-economic, I think.
Are fees for taking crypto trades still, I mean, how are those faring right now? Are they kind of on the higher end? Or?
They are higher. Obviously, like the more volume you trade, the lower they become. I know FTX is trying to be really competitive, and that's the good thing about crypto is there are multiple competitors, and I would expect those prices to come down over time. Like, I think it was, like the early 2000s when like the E-minis first came out, the E-mini S&P and stuff we were trading. I want to say, if I remember correctly, that round trip commission, so in and out of a trade, was like $14.
Yeah, it was.
Per contract. And then, like, I mean, I don't day trade E-minis anymore, but the last I remember, I mean, it was basically like less than $4 a round trip. So I expect fees and, you know, stability and liquidity and just the whole situation to get better over time. However, I have been saying that, but Kraken cannot seem to get their platform to handle any kind of volatility. So I don't know. We're still dealing with the same issues in some cases that we've had since 2014 and 2015. So,
well, is fee compression a concern for the exchanges like Coinbase?
Could be.
You know, I mean, similar to what we've seen in equities, I would imagine that that's wildly profitable for them right now. Because I think on a percentage basis, the fees can be a pretty high percentage for crypto trades.
Especially on ETH when the gas fees get really high when the network's congested.
Yeah, I mean, that's definitely been a problem on,
But I guess Coinbase doesn't really take that directly.
No, I mean, that's more of a DEX issue and, you know, Uniswap and doing things like that. And obviously NFTs. And that's why, you know, some of the NFT platforms that kind of custody the asset where they don't actually do an Ethereum transaction when you buy one. It's only when you sell it that they'll do that. So there's ways that people are lowering or at least delaying ETH fees, and hopefully with ETH 2.0 that'll get a lot better. But fees are definitely, you know, when you have a new market like this, it's a big piece of the equation. And so Nikki, to your point, I mean, that could absolutely, you know, kind of lower their profitability over time.
Xavier said, yeah, it sucks, but you can make it back in day one. Gotta love the volatility in crypto, right?
Yeah, absolutely. Cool. All right, let's keep moving on, guys. So we talked about Coinbase, talked about Bitcoin.
This headline is so cringy.
What is this? So,
okay, boomers.
Yeah, a boomer made this, I think.
They're using SPAC like a verb. I mean, I guess you can use SPAC as a verb, but the way they're using this is so silly.
Yeah, so the cover of the what is this? New Yorker. It's can I SPAC my stonks with NFTs? Blech. Right. So, I mean, I think it's kind of funny. I don't know. You know,
I guess it's kind of funny. You're right.
They're basically, this is kind of part of the zeitgeist of the whole COVID thing. And, you know, the 2020s is, you know, people just finding a way to get one up on Wall Street, right? And, you know, just all the hype and the innovation. I think obviously part of this is unsustainable with NFTs. You know, we've talked a lot about the hype cycle kind of cooling off right now and some prices coming down. And obviously SPACs have been a hot thing. But I mean, I just think it's cool that your average person is learning about trading, right?
For
Like
sure.
people used to look at us like, 10 or more years ago and be like, you guys are weird. What do you do? You're in the markets. Like, it was a small percentage of the population.
Your job is investing.
Yeah. Yeah. I went full time in the markets in 2007, and back there, like zero. Oh, no, I had one friend that was like a full time trader, but like outside of that, it wasn't a thing that people really did, as a hobby or whatever. Where today, now your average millennial or Gen Zer is like got a Robinhood account or, trading cryptos or into NFTs. So I think it's cool.
Yeah, I do too.
Yeah.
Did you hear that the New York Stock Exchange is selling NFTs? It's the first trade of certain IPOs. It's like an.
Oh, they're going to
Have you
sell the
seen that?
first trade
Yeah,
as
they're selling
NFTs.
the
I saw a
first
headline. I didn't read
trade
it.
as an NFT for
Interesting.
like certain ones. Like I think Snowflake was one of them, and I think Unity was one of them.
Yeah. It's an interesting experiment.
Yeah.
I thought about buying one. It was like $185. I was like, meh.
What's
Yeah.
the substrate? Like, what's the actual? Is it
It's
digital? Is it physical?
It was like a GIF, and then it came with I don't specifically know how to say this, but the code of the first trade,
Okay.
whatever that is.
Okay.
So it was a bunch of numbers.
Yeah.
And,
So some kind of visual representation of the trade.
Interesting.
of the numbers. Yeah.
Yeah. Cool. Well, I wanted to point this out. I think Tone Vase shared this today on Twitter, and I thought this was crazy. So, in Myanmar right now, they're having a ton of issues where they had a military coup, and one of my friends lives there. He left the country as of I think a week or two ago, but he told me that they basically froze all his banks in the country. This was apparently a line at the ATMs in Yangon, I think, which is the
Looks like a mall.
the capital. Yeah. So, they've just got basically a run on the banks right now, which is crazy. People hopping the border trying to get out of there. And literally Bitcoin fixes this. Like I sent Bitcoin to my friend and he was able to do like a same day fiat transaction where he was able to pay his staff and get food and stuff like this. So this, I think, is just such a good use case to show why we need Bitcoin. Yes, it's fun to make money. It's fun to build wealth, but it literally saves lives. Like we've heard from people in a bunch of countries around the world that have different issues, capital control, hyperinflation, things like that, where Bitcoin literally saved and preserved their wealth or got them out of a very dangerous situation. So anytime I see something like this, I always just like to point it out. That way we don't forget why the fuck we're actually here.
Yeah.
Yeah.
Why the technology actually matters and exists.
Bitcoin's use case, which many people say is not there, but it is there.
Yeah.
Obviously.
One of the use cases.
One of the use cases.
There's multiple.
Yeah.
But this is definitely a core, especially one of the core original use cases was the idea that it could be a mechanism for transacting outside of the traditional systems.
Yep. And it is every day.
Yeah.
Yep. Awesome. India's getting hammered right now.
Scary.
It's very unfortunate.
Scary chart.
So going parabolic, and if I were to guess, I would say these numbers might be underreported. If I had to guess, So India, they peaked out at just below 100,000 cases a day back in September of last year, and as of right now, they are going parabolic above 150,000 cases a day.
It's kind of crazy because in the U.S., it almost feels like we're coming out of this pretty successfully and life is starting to get back to normal. And you don't think that this is still a huge struggle for a lot of countries right now.
Yeah.
We're kind of in a bubble now. We went from having troubles with this to solving the problem, and now we can't forget that there are a lot of people still dealing with it.
Yeah, we're still in the middle of this. We're definitely not out of the woods, and we've heard issues about the Johnson & Johnson vaccine?
Yeah.
Where is that?
Causing
right here.
blood clots.
It's rather ridiculous, though.
It's pretty rare, right?
It's like 1 in a million, and there's I think there was some interesting commentary on Twitter from like even Nate Silver and some big accounts like that. We're like, what are we doing? We're shutting off vaccinations when there's been like, I don't know, 4 or 5 or 6 cases out of several million, and it's like there are more blood clot issues with birth control pills than there are this J&J vaccine. So why are we stopping vaccinations, you know?
Yeah.
But
the market didn't seem shaken by this much at all today.
That's good.
Some people were saying that it was, but I didn't see it.
Yeah. Yeah, you know, it's weird. Here in Texas, things do seem oddly normal. Restaurants are open, you know, people are out and about doing things.
Yeah.
Talking to some buddies in Canada, they're like, dude, we have a curfew. We can't go from province to province.
They still have that.
Oh, yeah.
Wow.
I don't know if it's all over. If anybody in chat is in Canada, let us know. But I've talked to a couple people like in the Montreal area and outside, and they're like, yeah, man, it's still very, very controlled here. And, you know, it's a strange thing because it's a balancing act, right? Between trying to do the right thing and trying to crush the numbers and also give people freedom. And look, I know, you know, no matter what we say, somebody's going to tell us we're wrong, right? Like this is a very, very hot topic, obviously. I just hope that, you know, we don't have a variant that is completely, you know, these vaccines are completely ineffective against. And I've heard that, what was it? Is it Israel that's having another flare up, and they're saying like maybe the Pfizer is not as effective as they thought.
Gosh.
So
interesting. Yeah, I mean, and that's the worry about the India numbers, is that because of their large population, billion-plus population, that there's a lot of opportunities for variants to emerge there. And if those variants are resistant to the vaccines, then we are back in the same situation over again, right? And then what? So that's the worry, and the rate of change. Like, you know, some people pointed out that the India numbers relative to the total population are still relatively low, but the rate of change, you can see the speed of the spread is really what worries me here, because these numbers could quickly get very high with the exponential growth rate. So
yeah,
that's the concern, the variant concern. And we'll just have to wait and see how it plays out. But that's actually why the Fed has had this on their radar for the last month, when they've been talking about their desire to keep rates low and to not take action too quickly, because they actually said, members of the Fed have said, we're still monitoring variants out there, and we're still trying to make sure that globally the virus gets contained before we start to choke off the economic recovery. So in some ways, the Fed has kind of been ahead of some market watchers here.
Interesting. Yeah, we got a bunch of comments from people in Canada. He said, yeah, they're wrecking us. Ontario is still on a full lockdown. BC is better, so maybe it's less restrictive on the West Coast. Yes, still have a curfew. It's insane. In Catalonia, they're now locking down for the vaccines, thinking of running away. Yeah, it's a wild situation right now up there.
Yeah, so there's a lot of, globally, there's still a lot of variation between countries and how things are progressing, and it is difficult to keep that in mind when we're kind of in a place like the US or the UK, where the vaccination rates have gone up and the case numbers have been flattened a lot.
Yeah.
But it should perhaps still be on investors' radars. We think about, you know, this show is all about markets and investing. And as we think about potential impacts on the market, is there a, you know, a gray swan out there that, you know, could cause another severe sell-off? It's worth thinking about.
That's what I was going to say.
Markets hit new all-time highs.
Yeah, everything's hitting all-time highs, and no one's feeling the pandemic blues right now, right? But there's, like you've said before, we're still not quite out of the woods here.
Yeah.
And there is a risk. I don't see how our economy or other global economies can handle another lockdown or can handle it again.
Or if people will even go back into it.
Yeah, like if we do see another variant that, you know, governments try to lock people down again, and we got to go through this thing, and we got to print more money, and I don't even see how it's possible to deal with it at this point.
Well, just fingers crossed that we don't have to do that again, and that things will continue to get better.
But I think a risk that we need to consider with the markets, especially at all-time highs.
Absolutely. Yep. All right, cool. Well, that's always a dark topic, but I mean, it's definitely something to think about, right? Because it affects markets, it affects, you know, what we can do, and
just stay on top of all possibilities.
Absolutely. All right, so what is this? Grab to go public and record-breaking SPAC merger.
Yes.
So yeah, Grab is it's a super. So do we use this in Indonesia or is it up in Thailand or both? I can't remember.
Yeah, Indonesia for sure.
Okay. Oh yeah, here you go. Yeah, it's down in Malaysia as well. Yeah. So what's the deal with this, guys?
Yeah, so Altimeter, which is a fund that has a fantastic track record over the last decade of investing in technology companies, both public and private. They are one of their SPACs. They have 2 SPACs currently trading, and one of those SPACs is going to be taking a stake in Grab and taking it public, which is kind of cool because Grab is, like you said, a super app in Southeast Asia. A lot of possibilities for growth in everything from delivery to payments to commerce, etc.
Yeah.
And what's also interesting about this one is that Altimeter has structured it so that their shares are locked up for 3 years. So Altimeter is really trying to align themselves with shareholders and not just be like a pump and dump type of SPAC. And so I really like the leadership of the SPAC. I like the business. I want to see more numbers and plans about their potential growth avenues. But, you know, I think overall this is a really interesting deal. Valuation isn't going to be cheap. I mean, I think it's what, 40 billion or so valuation. But
when is this going to list? Do we know?
Well, it was announced today, I believe. The deal was announced today. It'll take a couple of months for it to close.
Oh, okay.
But you can actually buy the SPAC that's taking it public now. AGC is the ticker, Altimeter Growth. So you could technically, get into it now today.
Gotcha. Okay. Sweet.
Assuming the deal closes.
And then I guess on the other side of the coin with SPACs, we've got regulators stepping up scrutiny. Nick, what'd you want to say about this one?
I don't know if I posted this one or was this Travis that posted this one?
Yeah. So the SEC is starting to make waves in the whole SPAC industry because they're starting to put out some guidance about what SPACs can do from an accounting perspective with the whole warrant side of things. They're looking at what SPACs are doing with their disclosure statements. There were some comments out of the SEC this past week that SPACs aren't going to be the way that companies can go public to avoid IPO disclosure rules, that SPACs are going to have to start, really locking down their disclosures and make sure that they can't just say whatever and make whatever projections and then falsify it. And then all of a sudden when they're public, oh, sorry, they've got to be more thoughtful about how they make projections. And
that's probably good.
That is good. I think a good thing. I mean, Definitely. That's been a challenge with these SPACs is I remember looking at the SoFi presentation and listening to it. And I was like, man, there are just multiple ones. The goals are lofty. The projections are lofty. And it's like, okay, it looks great on paper. It looks actually perfect on paper. But we all know that things don't always go to perfection. So I think that it can be kind of misleading. And you're essentially having to wait to just see for the company to perform and for you to get the results as you go.
Whereas with a traditional IPO, you're held to a higher standard, and you can't say anything.
Just say, like we're gonna have a revenues of $5 billion in 3 years. Like okay, great.
Yeah.
We'll see. That's like what you're kind of left with.
Yeah. Cool. Well, I mean, I know SPACs are obviously one of the big hot points of 2020 and 2021, and this was also really interesting. What do you guys want to say about this? More money poured into stocks in the past 5 months than the last 12 years. It's really interesting when the government creates trillions of dollars out of thin air. What happens?
Yeah, this was a staggering piece of data. I didn't even believe it at first. I was like very skeptical. Then I looked into it and read all the articles, and I was like, okay, this is legit.
Yeah.
Looks legit. So a lot of fun flows into funds. So I believe it was mutual funds, ETF funds. I'd have to double check that. But basically a lot of money based on, like you said, stimulus. I mean, a lot of people got a lot of money probably pouring into equities too, in regards to no yield. Where do you go when you have no yield? You go into equities. It's probably a mix of a bunch of different things, but it is hard to believe that it's true.
Yeah, it says a record $576 billion has flown into equity funds since November, more than $450 billion seen in the last 12 years combined. Yeah, I don't know. Is there anything else we could extrapolate out of this?
I'm sure there are a lot of second and third order effects to think about here, but yeah, I mean, I think we've seen the savings rate go up significantly, and so that's a big part of it. And then just the overall total global nominal dollars, that are being inflated, and that's flowing in. Plus, hot markets always attract money. So, when the market's hot, you'll have inflows. There's also a higher retail investor participation driving this as well. So a lot of factors here. And I think we can see outflows quickly too, though. That's the thing.
That's what I was going to say is with the market looking at what we've seen, just the trend, the bullish, strong trend, with the inflows into these funds, equity funds, I can see the correction or the pullback, happening fast.
Yeah.
Because that's what's been driving this price higher and higher, right? Is all of these inflows.
Yep. And just taking a look at the chart. So we're looking at the NASDAQ right now, and as of today, just broke out to a new all-time high. This actually looks kind of similar to Bitcoin's breakout. It's interesting to see them both breaking out on the same day.
Yep.
Had multi-month resistance, and Nikki, I mean, you've said this over the past year, like technically, based on the chart, this thing has just been a monster, and there's really been no signs of weakness or a slowdown so far.
Yeah. Shorts have just been getting run over.
Yeah.
It's phenomenal.
Yeah. Well, let's jump into some other charts. If you guys have any questions, feel free to throw them in chat. As far as altcoins go, guys, I mean, I know usually when I open that up, people are like, what about this coin? What about this ticker? What about this? It's like, look, we are in what I call popcorn season, where it's like, you have all the popcorn in a bag and they just start popping off randomly. Usually it's, sector by sector. Like, a couple months ago, we saw privacy coins start to pop. I was buying down here in the 150 zone on Monero, had really beautiful continuation. We're now, basically up over a double on Monero. Also Zcash, this was one that I was buying the breakout around $100. We're up above 200 today. So, that was kind of the theme of, Q1. One of the themes, at least, was privacy coins. And then we've had a bunch of DeFi stuff popping off. Obviously, some larger caps like Link. We're just seeing these breakout patterns everywhere. And we get, during altcoin season, it's almost like in some case fundamentals don't matter. And I want to be careful and explain what I mean by that is like, obviously fundamentals matter, but during an altcoin season, the chart matters more, right? And when Bitcoin and Ethereum are pulling other things to the upside, that means there's a lot of opportunity to be active and to grow your wealth by actively trading altcoins. Now, you got to be careful. A lot of people get wrecked with altcoins, but when you have stuff that goes from, like $4 to like $35, like we've seen recently with Uniswap, if you understand how to trade that and how to take profit and plan your trades and where to get in, you can actually do really, really well. What you don't want to do, though, is you don't want to chase and just buy whatever's popular too late and then end up being a bag holder, right? Like one thing I say all the time is like, I actively trade altcoins to accumulate more Bitcoin and more fiat that I can reinvest into Bitcoin and other assets. So just don't become a bag holder. People that have a diversified, I'm using my quotey fingers, crypto portfolio with 200 tokens, and then they bag hold through the bear market. They're the ones that end up rage quitting at the lows. So don't be that guy or lady. Oh, man. All right. What questions we got coming in?
I was going to ask you guys a question.
Yes.
Okay. So I created a model portfolio on YCharts.
Okay.
And it was I call it the millennial portfolio.
Okay.
Half Tesla, half GBTC. Okay.
Nice.
So
no Dogecoin?
No Dogecoin. I don't know if YCharts has Dogecoin. I'll have to find out. But okay. What do you guys think the returns over the past 5 years have been for this portfolio?
So Tesla and
half Tesla, half
GBTC.
5-year time frame.
5-year time frame.
So Bitcoin's basically been doubling. Yeah. So I would say, I would guess the average returns over the past 5 years are 150% or 100%.
Oh, you're doing average. I was talking the whole
Yeah.
You could do the annualized. Okay,
So say
annualized.
500 to 750%.
I was going to say 1,000 to 1,500% total return over 5 years. So yeah, probably about 100% or 80 to 100% CAGR.
96% annualized return.
Nice. I was right in my 80 to 100%.
Yeah.
There you go.
Yeah.
Yep.
CAGR being compound annual growth rate.
Yeah, I thought that was just fun.
Yeah.
Fun model portfolio to make.
I mean, on a backwards looking basis, you picked two of the best performing assets of the last 5 years.
I know, but it's just crazy to think like 100% annualized returns over the past 5 years.
Yeah.
The standard deviation is a doozy, though. You know, the standard deviation is 80,
you had to experience some serious drawdowns.
4%.
Yeah.
So,
See, and that's the thing. You know, like everybody looks at the growth. Let me say it this way. Everybody that's coming into Bitcoin now looks at that and goes, oh, these people just got so lucky getting into Bitcoin earlier. No.
Y'all went through some shit.
Yes.
Y'all went through 100% drawdowns.
Basically.
That standard deviation is no joke. White Charts gives me the annualized standard deviation of the monthly returns and of this specific portfolio. I mean, 84% is high as crap.
Yeah.
The S&P 500 standard deviation is around 17%, I believe.
That's
or
why
15%. Sorry.
That's why I tweeted this out last week. Because I was thinking about this, because now we're starting to get you guys got lucky bullshit and whatever. Bull markets try their best to shake people out along the way, right? Like that's just how bull markets develop, is they show you divergence. You have fast crashes, washouts, you have panics. But then bear markets cause people to lose focus during the most profitable times to buy, right? So the people that, and we have a unique circumstance where we've helped thousands of people learn how to invest. And I've talked to hundreds of people that have made life-changing amounts of money. The people that have made life-changing amounts of money and done it right and made it, they don't get shaken out during bull markets, and they actively trade on the way up, but they know how to manage risk. And B, they don't give up or get distracted or lazy during the bear markets. We talk about it in seasons, right? Where, you have your harvest season, which is like right now when prices are going crazy, you're harvesting, you're taking profits, you're diversifying into other things, you're stacking more into cold storage, whatever. Then you have your winter season, which is the bear market, and everything's terrifying. Then you have the spring season, which is the depths of the bear market, which is where you plant your seeds, but you have to have confidence, right? You have to have conviction that this isn't just a scam or a bubble or a fad, because without that, you're going to lose focus. You're going to get lazy, and you're going to chase when things are high, and you're going to give up when things are low, right? So I see the very two clear groups of people. It's the ones that do it right and make life-changing amounts of money, and the ones that are lazy or just give up or get reckless and aggressive and greedy during bull markets. They unfortunately get themselves taken out of the game with either leverage or just emotions. Yeah.
It's always the emotions.
Yeah. I always tell people, like, if you want to learn who you are, trade the markets, because you can't hide from that shit.
Yeah.
Well, high risk, high reward, man. Is that saying true or what, right?
Yep.
Absolutely. All right, I'm going to scroll backwards here. What tip would you give for people who did not accumulate altcoins and are looking to maximize gains now without holding the bags? Yeah, you've got to predefine what your trades are. Okay, so there's really 3 or 4 categories of trade setups. You have accumulation plays, right? Which is like when I'll just pull up let's do a daily on Bitcoin. When Bitcoin is in an accumulation period, right? Where it's 80% or more off of the all-time highs, when it's in the depths of hell and everybody's like freaking out and losing their minds, those are the best times to accumulate, right? So we look for accumulation range breakout trades. So an example of this is like Ethereum. So I didn't trade Ethereum from really when the bear market started in 2018. I didn't trade any of this through 2018, 2019, and most of 2020. The first time that I really stepped in here, I guess I lost my drawings on this chart, but the first time I started trading Ethereum again was in the 300s after we started to show signs of life out of the accumulation range, right? So that's earlier in the cycle. The second level to that is what we call like bull market trend trades, right? So this is where we talk about like buying dips, you know, when the price of stuff falls 20, 30, 40%, buying dips, or buying breakouts. I prefer breakouts because you can set risk to reward a lot better, right? Those are like mid-range, which I would say is like what's working now. We got breakouts all over the place, and you can predefine what your profit and stop losses are going to be on that. And then later in the cycle, when things are going parabolic, it's riskier, and a lot of people can't do this the right way, but you could actually make money shorting either into parabolas or when the markets are rolling over. Again, it's a lot riskier, and most people lose money doing that. So your skill level has to be a lot higher for that. But mid-range, I mean, like right now, if all you're doing is buying dips and breakouts and then taking profit along the way, like you would have made a lot of money over the past 6 months or so. And what we're currently seeing. So how long will the music be playing? How long will the party go on? Nobody knows. But that's really, obviously, like an oversimplified way of how to do that.
Yeah, so to summarize, it kind of sounds like, you know, because we're not in the early accumulation phases, and his question was, or his or her question was, if you didn't get in during the accumulation phase, what do you do? And it sounds like, you know, you try to take advantage of some of the breakout trades, but one of the components there is obviously to keep pretty tight stops because you don't want to end up being the bag holder if the music stops.
Yeah, exactly. And the other thing too is like you've just got to decide, because we all have different risk tolerances, we have different skill levels, we have different, you know,
Time
free
horizons.
time, and time horizons, right? Like time during the week that you can dedicate to the markets, and like, are you coming up on retirement, or are you 20 years old and you're like, yo, I'm working hard, I'm stacking cash, right? But so some people, the right answer is you don't trade at all, and you just buy Bitcoin and you stuff it away on a cold wallet, and you know, you come back 5 or 10 years later and hopefully you're up, right? You can be more tactical though, right? You can time it. You can develop that skill stack of learning how to maximize your gains on the way up and also protect yourself on the bear markets. That's one thing that we hear from people in the community all the time is like, you know, you guys were always rational and helped us not get destroyed during the bear markets and actually prepare in advance for them, right? Because they happen. And look, you know, yes, institutions are here. Yes, we have a unique set of circumstances that's different compared to 2017, but there will be pullbacks. There will be bear markets.
Absolutely.
Mark my words, like we will have other scary times in the future. Is that going to be into this year or a couple years or tomorrow? Who knows? But you've just got to be prepared for it and decide what level of involvement do you want to have in the markets. How hard do you want to work?
Sure.
Yeah. All right. What other questions we got, guys?
Are we parabolic yet?
I don't think so.
I don't think so either.
I mean, if we're just looking at like Bitcoin's chart, this has not, the trend has not sped up relative to prior price action, right? Yeah. Like it's still just very...
It was a healthy stair step up.
Yeah. I mean, you can see the trend is just barely at this point starting to, like actually the breakouts haven't even sped up. So we had, you know, the first run in retracement basically took a month to break out. This one peaked out in late February. So this is actually taking longer to break out. So I don't see any signs of parabola right now. Obviously the top could come whenever, but doesn't look like it to me.
It does depend on what time frame you're looking at. You know, if you're looking at a weekly or a monthly, it probably looks a little scary. But if you do that with like the Dow Jones or the S&P 500 or their NASDAQ, it's the same thing. You know, it looks like it's been going parabolic for years and years. So, you know, that's why I think the daily chart is a really good barometer for kind of figuring out how the trend has been.
Yeah.
Some altcoins might be parabolic, like BNB or something like that.
Oh, yeah, absolutely. Usually the smaller the market cap, the faster the market cycles are. And like the bigger the runs and then the faster the crashes are. So like for Ethereum, on Ethereum, for example, I don't know what happened on my drawings today. Anyway, so Ethereum, you can see had a breakout above the 1400 all-time high. And this is really just starting to pick up its trend. But same thing, like, you know, pretty big large cap. I don't see signs of a parabola here. my first target has been up around the 3K zone. That's a 2X measured move of the prior accumulation range. So that's kind of my first area that I've been holding for. But yeah, you can see other stuff like Filecoin was one that went parabolic. You know, basically went from, you know, $50, had 3 legs to the upside, went from 50 to almost 250 in just a couple of weeks. And that's why you get these deeper pullbacks, right? So this thing pulled back, you know, about 40% over the course of a week. Also another one, yeah, that's just had massive gains is BNB, you know, kind of hopping on the Coinbase hype train there. Yeah, I pointed this out in the watch list a couple weeks ago, had a potential breakout above 350. That thing is ripped very quickly to 600.
Beautiful breakout.
Yeah.
Wow. Is that what Dogecoin's going to do? Tell us.
Good question. I mean, dude, I'm telling you, these breakout patterns and dips are all over the place right now. It's crazy. And then you've got stuff like smaller cap stuff like KNC. Yeah, so this was one, you know, bought the breakout here at 250, and it's just kind of stair-stepping up. So you get kind of these slower grinders, but yeah, I mean, it's just opportunity galore right now.
These parabolas don't seem as crazy as we've seen prior, though, in altcoins, right? I mean...
Well, during the last quarter of 2017, things did get ridiculous. It was like when Bitcoin went from 8 to 20K in 3 weeks... Yeah, altcoins were also just doing blow off tops. It doesn't feel like that. And the on-chain data, the fundamental on-chain data doesn't suggest that that's happening either right now. So I'm looking at the chart, I'm looking at the fundamentals, and I'm like, I don't see signs of a top, but I'm still taking profit along the way because you never know what could happen, right? It could be Coinbase lists, and that's the event that creates the top. I don't think that's going to happen, though. It's not, you know, with CME futures opening in 2017, what that was a shift in market, you know, dynamics. Basically, it was like you had a whole new way for people to manipulate or, you know, take a counter trade.
Yeah.
So.
Yeah, fair points.
Yeah. I don't know. What do you guys think? I'm questioning my original plan of dollar cost averaging into Bitcoin right now. Yeah, I mean, look, that's fine. Like, there's nothing wrong with doing that if that's what your time and your, you know, your desire is, right? It's just a dollar cost average and keep it low stress and not think about it. I don't see any problem with that. But if you are going to trade, if you are going to try to be more tactical, you've got to develop the skill stack, because without it, you know, you're going to make emotion-based decisions. You're going to start trying to copy other people. And you're at that point, you're always playing catch up. You're never ahead of the game. You want to be able to learn how to think like a chess player, 2 or 3 steps ahead of the market. So,
I mean, dollar cost averaging is great if you're thinking about long-term, you know, holding long-term.
Yeah.
That way, if the market sells off, you can take advantage of that. If the market, you know, you're not having to worry about trying to time it right now because we're kind of about to break out, and maybe that's why you're questioning things because of the current price action. But usually longer term holds are really great with dollar cost averaging over time. So.
I think DCA is great for minimizing regret, but it's not going to be the thing that is typically going to give you the highest possible gain versus someone who picks the right spot to go all in, right?
Yeah, more tactical.
But I often use DCA and stocks and for my portfolio quite a bit, because I'm targeting a compound annual growth rate of 20 to 25% on my portfolio. And it's all about like the risk-adjusted returns long-term and compounding. It's not about trying to maximize at every possible point the potential upside. So it really, again, goes back to what your goals are, what your time frame is, how your mental approaches to markets.
Yeah.
And so
so like, I want to do that. I want to do what you do for the rest of my life, right? Or at least have Nikki manage that part of the portfolio, right? Because you can get super wealthy compounding at 20% a year over time, right? We have been blessed, however, with this unique thing that's called Bitcoin, and we are so lucky to be living in a time period where we are literally shifting the belief of what money is for the world. And like, it's such a cool experiment, but it's also
very high rates of return.
At very high rates of return.
Annualized rates of return. Okay.
Yes. So that's why I'm like, okay, I have this opportunity in front of me, and I got quote unquote lucky because I was one of the first guys in the space that knew how to actually trade. So I did well, and I've built my stack. So I want to try to maximize that. Who knows how far these gains will go over the next few years or decade or whatever, but I just want to maximize opportunity while I have it. And if something happens where Bitcoin normalizes and most of the shit coins die, that's great. We'll always have the stock market. We'll always have entrepreneurship to generate more cash flow that we can invest in the markets, right? So I don't want to be a one-trick pony, just crypto. That's why we obviously look at the stock market, because, you know, I know, you know, a lot of people in the crypto space look at the stock market as this manipulated thing and it's Fed induced, whatever, which, you know, you can make some argument that some of that's true, but you're owning equity in profitable companies.
It's literally how people have become millionaires over their lives, by investing in the stock market for 30 years.
Has the longest track record of building wealth.
Yeah. So you can talk all the crap you want about it, but if you do it the right way, you can truly build your wealth sustainably over a long period of time.
Yeah.
Whether you're tactically investing actively or just passively investing in funds, you know, in a 401k or whatever.
Yeah. And that's the thing too. It's like, if you're going to look at the stock market and you don't want to put time in, what would you guys say to do?
Oh, certainly. I mean, you could do a passive approach, dollar cost average into the markets or into passive funds over time, low cost ETFs, lots of different ways to hit that goal.
And it's never been easier. I mean, now robo-advisors, they literally do it all for you.
Yeah.
Like,
Yeah.
And talking about fee compression, like the fees for good ETFs have come way down.
yeah, very much so.
Yeah. Like, what's a robo-advisor right now? Like 0.25%? Is that still around the...
Yeah, 25 basis points.
Yeah.
0.25%. That's on the low end. Some of them are a little bit higher. I think some may even be even lower than that. It just depends.
Yep. Awesome. All right. Who is holding the camera? Good cinematography. That's our homie Kevin behind the scenes. Let's give it up for Kevin. Yeah. Yeah, Kevin's our producer / tech or extraordinaire.
I feel like one day I want to get Kevin on the show and just ask him a bunch of questions about technology.
Yes.
He knows so much about technology.
Gaming, digital valuables, basically NFTs in games.
He's also plugged into the Wall Street Bets crowd.
Yep.
So some insights there possibly.
Oh yeah, awesome. Well, I know we're going a little over an hour, so we can start to wrap this up, but are there any stonks that you guys want to look at? Anything that you see huge opportunity in, or that you're thinking about or planning for?
One that's pretty interesting that is an announced SPAC deal this week that is stocks and crypto related is MUDS. So this
MUDS?
is MUDS. This is Mudrick Capital Acquisition 2. It has a very strange name. But this is a SPAC that's taking the Topps company public. Topps being the old collectibles and baseball card company that, you know, has partnerships and the rights to make collectibles and baseball cards and monetizes that through different avenues. And so Topps, with the rise of collectibles, with the rise of trading cards becoming popular again, they've done pretty well. The numbers look good. And the valuation on the deal is actually pretty reasonable. It's only like 12 times EBITDA, something like, I think, 15 to 20 times cash flow, 2020 numbers anyway. And that looks very reasonable. And then on top of that, you kind of have a little bit of a call option in potential NFT plays. And so Topps, I think, has a lot of really good intellectual property and a lot of partnerships with Major League Baseball, F1, UEFA, so they can potentially become a pretty big player in NFTs through these partnerships, assuming they can produce the right products, create enough scarcity. But
so is this where they announced the deal in early April? Is that why the price popped?
Yep.
Cool. And
but for a SPAC, it's still trading at a relatively low premium to the original SPAC price on the deal, so it's not crazy overvalued yet. And, I don't know. The part that's hard to figure out is what's the true NFT opportunity for them, and is the collectible / trading card market in a bubble? Because if it is and it pops, then you could have their numbers decline a lot in the next couple of years. So there is that risk there.
Yeah.
But like I said, you still have this huge potential call option upside on NFTs. And another interesting fact here is that Michael Eisner, the former CEO of Disney, is involved here on the board and as an investor. So you've got some pretty interesting backing.
Interesting. Actually, so, okay, I'm trying to think, again, like a chess player, 2 or 3 steps ahead.
Yeah.
Yes, NFTs are in a bubble. Yes, prices are already starting to come down. So let's say this, this launches, everything looks good. There's some hype initially behind it. And then the NFT market kind of craters. If there is a second wave, right? If NFTs and digital collectibles stick around in a way that they can profit from, this could be a good play maybe a couple years out.
Yep.
Right? Like NFTs are absolutely going to change the game with a lot of things, from concerts and not just, digital art, but there's so many other use cases. So if they can find a way to piggyback on whatever those future trends are, that could be a really good opportunity.
Yep. And I think this is a better NFT potential play in the stock market than Playboy, which has tripled since its SPAC. And Playboy actually did.
What's the ticker?
PLBY. And Playboy has actually, I believe,
wow, this thing has gone on a tear.
Yeah, and I believe it's actually completed the deal. So this is a SPAC deal that acquired the Playboy company, which is essentially a licensing company now, which is just licensing out the Playboy brand. And has
what do they even do anymore? I thought they stopped their physical magazine, right?
Yeah. So
how do they make money?
As far as I understand, it's all digital, and it's digital / partnerships where they license out the Playboy brand to clothing brands. They earn fees from that. They're also trying to eventually potentially do NFT plays with the Playboy IP. And what's interesting is there's still not a lot that's been done in that whole arena yet for Playboy, but the market, retail investors are excited about it, about the potential there. And yeah, it's actually up about 4x from the original SPAC price. But again, I think the Topps business could be a better NFT play than Playboy potentially. I mean, Playboy could also be an interesting play, but I think Topps has just more IP that's directly related to NFTs. So I kind of like the Muds play a little better than Playboy. And if it follows Playboy's lead, you've got a lot of upside.
Yeah, that's an interesting one.
Yeah, this will be an interesting one to keep on watch.
Yeah.
I thought that it would be good to address this. Nicholas says in chat, we've enjoyed 40 years of declining interest rates. This makes asset prices rise. If interest reverses, asset prices will also reverse. And I think that is, you're right. If interest rates rise, that could put some pressure on equities. But you also have to remember that this is why we allocate our assets to different asset classes, right? Not everybody has been in an all equities portfolio for the past 40 years, right? A lot of people we had a bond bull market for years.
Yeah, up until recently.
Yeah, up until recently. And so a lot of people were able to benefit off of that. But I think that this is why the case for learning asset allocation is really important, and understanding how the different assets function in your portfolio in different market environments, in different rate and interest rate environments, etc.
Yeah.
So, it's not just about equities. If the environment changes, we're ready to change with it and adjust our portfolios accordingly.
Cool. So I'm going to put you all on the spot. So say he's right and rates do continue to climb. What are some things that people can think about or possibly do?
Well, you definitely want some inflation hedges. People are probably underinvested in things like, gold and miners and those kinds of things. If we get into a really heavy inflation environment, crypto, pretty good hedge.
There we go.
Yeah. Real estate.
So just buy Bitcoin. Okay.
Real estate, real assets can definitely work well as inflation hedges in the right context, in the right places. There's obviously some companies that will benefit from inflation, companies that like marketplaces or companies that take royalties where essentially their revenue just rises nominally with inflation. Mm-hmm. Those will do well.
Merchants that are taking commissions, like card
issuers,
processors,
card processors,
banks, financials.
So it's not a binary thing where rates go up, everybody loses. Right. It's like there is still a way to build wealth and beat inflation
if
and
you're
higher
allocated
rates.
properly.
Yeah, there'll be winners and losers for sure. It won't all be losers. So, yeah.
You just got to be prepared, right?
Yeah, I think so. And
we've been talking about the danger of rising inflation for a couple months now, and you know the signs have definitely started to peak. And you know, with the what was it, $5+ trillion that's been printed recently, and you know this is kind of like everybody knows now the M2 chart showing how much new money is in circulation. Like that has to have some effect at some point. Doesn't have to happen immediately, but inflation is that reflexive thing, right? Where a little bit of inflation begets more inflation and future expectations, and then blah, 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 right?
Yep. That's right.
Yeah.
Yep.
Do you ever plan to eventually exit crypto and be like, cash me outside? How about that? I'm never, okay, so I have a rule that says never go all out of crypto. Like I'm never going to sell all my crypto. You know, in fact, I've been thinking about like, okay, for the past 20 years I've been in the markets, I've been denominating my profit and loss in dollars and thinking in terms of dollars. I want to start using Satoshis as a unit of account. And I tweeted this. This is kind of stupid, so I apologize for the ridiculous statement, but I tweeted this today. I said, have you guys seen the broke versus woke thing?
Yeah.
All right, I'm trying to be cool. I know I'm getting old here, but damn. Broke, having millions of US dollars. Woke, having billions of Satoshis. So what I was really trying to say there is, like, I want to start to think of wealth in terms of Satoshis, and, you know, like one Bitcoin, 100 million. It's like, okay, you could be 100 millionaire with one Bitcoin, right? I want to start thinking like that. And hopefully the higher Bitcoin's price goes, the easier it is to use Satoshis or some derivative of Satoshis as a unit of account. And so obviously we're going to always have dollars, but I want to actually trade. This is what I've been doing for the past 8 years or whatever, trade to accumulate more Bitcoin, right? So no, I will never fully exit crypto. Now, will we always be doing the show or whatever? I don't know. I enjoy doing this. What do you guys think?
Yeah.
It's fun.
Until I, you know, lose my mind. Hopefully not too soon.
Yeah. Yeah. I mean, we love having the community and helping people and being engaged. And I think it makes us maybe better traders and investors in a way to be engaged and constantly have to think through our own process and articulate it to people.
I think so.
Yeah.
Yep.
Yeah.
Keeps us in the markets and up to date with everything, and I like that.
Yeah.
I don't know what I would do. Like if I wasn't in the markets and just laying on a beach.
Yeah.
I'd be, like,
it gets old after a while.
So many things would be happening, and I would be like so disconnected. It would make me uncomfortable.
If you love the game, right, why quit it?
Yeah,
right?
I love the game.
Why the hell is Mark Cuban talking about NFTs right now? He doesn't need to make money on NFTs, but he loves the game.
True.
So, Craig was asking thoughts on INX IPO. Have you guys looked into it? It's the first SEC approved regulated trading platform for crypto and eventually tokenized stocks. Have you heard of this one, Trav? INX?
No. Oh, actually, yes, I have. Yeah. Yeah. Someone asked me about this about a month or two ago, and I looked at it briefly. Yeah. But I can't say that I'm an expert on it.
Yeah. There are several competitors in this space, you know, even stuff like T0, and like I'm interested in all of it. I was kind of early on T0. You know, there's some that are making progress faster than others. I feel like the crypto spot exchanges have been the most profitable. And then behind them is kind of the DEXs, the decentralized exchanges, like Uniswap, you know, stuff like that. Like, but yeah, you know, these types of ATSs or, you know, trading platforms or any kind of alternative way of transacting, like, yeah, I'm bullish on all of it. When are you opening your 8-week crypto boot camp again? Good question. I know we sold out of the one we did, what was that, about 90 days ago? Yeah, we've got a lot of people asking about it, so we may roll something out pretty soon. Okay, cool. I see a lot of comments coming in. I think we need to go ahead and wrap it up. We're almost at an hour and a half.
Oh, wow.
So, yeah, that went pretty quick.
Time flies when you're having fun.
Absolutely. All right, last question. Heidi was asking, do y'all think we're at the beginning of a new era in crypto? If yes, are we the pioneers of the future? Does that mean we'll always have to be bullish? That's the $100 trillion question, isn't it? Like,
that's a good question, Heidi.
Yeah. Trav, is Bitcoin going to be the world reserve currency? I like to ask you this every 6 months to see if your answer changes.
I still don't get the sense that Bitcoin will be used as the main transaction currency of the world, but as a store of value. I think it's got some really interesting properties. It's more and more every day, I think, becoming seen as the digital store of value. So from that standpoint, I think, yeah, I'm as bullish as ever. You've got institutional investors who are believing it more and more. But again, it's like, even if you have something very valuable, doesn't mean that it's not going to experience drawdowns and corrections and market cycles.
Yeah.
I mean, even if you look at Amazon, how many times did Amazon have a 40% drawdown, or even as much as like an 80 or 90% drawdown, like we saw in the .com bust, right?
Yeah.
And then it still went on to become one of the most valuable companies ever. So I guess the question is, what's your time frame, and are you willing to stomach drawdowns? And what kind of investor are you? We talked about this earlier. Like, are you someone who's trying to take advantage of the market cycles, or are you someone that's just wanting to, like, long term just stay invested and not worry about the fluctuations?
Yeah.
So I don't think it makes sense to always be bullish.
Mm-hmm.
Yeah,
Yeah.
I mean, that's why we have different capital buckets, right? So like, I have my active trading capital when we're in a bull cycle, and then when bear markets happen, I start looking for other opportunities. I have more time to look at private deals or whatever. There's always ways to diversify during bear markets. And then accumulation is where you put in the work, right? Accumulation is where you get ready and everybody's telling you you're crazy. And that's just the cycle, right? Crypto is a big boom and bust cycle. But I do think, to Heidi's question, are we entering a new era? I think so. My buddy Willie Woo says that about 2% of the global population is involved in crypto in some way right now, and that's doubling every year or two. So we are still really early, I think.
Yeah, I agree with that.
Yeah.
And we've talked about all the potential applications that are still being built that are still very early stages, whether it's NFTs, STOs, smart contracts, et cetera, right? There's so many potential things that are just now really being worked on and coming to market. And, ETH 2.0 and the scaling opportunities with some of these blockchains are just now really being brought to market. So
Yeah.
early stages from that standpoint.
Yeah, absolutely.
New era for sure. I'm really excited about the next decade in crypto from a application standpoint.
Yeah. Feels like we're like in the late 90s for the internet. Like the early 2000s is where things really got kicking, and people were waking up to the internet in the late 90s, like your average person. And then, high-speed internet came out, and then you got faster computers, and then all of a sudden it was the explosion of like social networks and all these use cases that the early people in the internet never really considered. And now we're hitting these points where it's like with NFTs and these things, you're starting to hear of use cases that we didn't even think about in the early days of Bitcoin, but it's blockchain technology, right? And it's spinning off. And yes, there's always going to be a lot of scams and a lot of bullshit and a lot of good stuff that's well-intentioned that just fails. But when you think about programmatic concert tickets, right, where you can crush the secondary market and actually get fans in at better price. There's all these things that are happening now that it's like, oh my God, yeah, that's going to work. Or like these little use cases that we are coming up day in and day out. And I always say, like, there's never a boring day in crypto.
Yeah.
There's always some awesome shit happening.
It's like a new era across the board, right? Like in the future, we're probably going to be like buying tickets through some NFT or some type of crypto technology for a concert that's like in a
digital world.
Yeah, digital world, in a VR or whatever concert. Like, and then our diplomas and our titles and our deeds, and it's all going to be recorded on the blockchain, and just like everything's just going to be so digital and different.
Yeah. But you know what? I don't think it'll feel different to the average person, right? It's like, people that use the internet or email, they don't understand what happens behind the scenes with the HTTP protocol or, all that stuff. Like they just use it, right?
Yeah.
And the more simple and the more usable and safe it feels to the average person, the more people that participate in it. That's why I think centralized exchanges will pretty much always have their use case, because people will want that. People will want products where they don't have to custody their own stuff, for right or for wrong, right?
Yeah, man. I just had a thought that we're in roughly the third decade of the internet's existence, and some of the most valuable companies have been built in the second or third decade of the internet, like Airbnb and Coinbase and Uber and you name it, right? There's all these companies, Stripe. There's all these tens of billions of dollars of value created from companies that were just built in the second or third decade of the internet, and we're now just at the beginning of the second decade for crypto.
Yeah.
So imagine what things are going to be built in this decade and even the next decade of crypto, like probably some mind-blowing
things we aren't even thinking
applications
about.
and companies.
If you are building the next $100 billion company, let me know. I've got capital. I'm an angel investor. Let's go, baby. We should actually do a pitch contest or something through the Skill Incubator.
That'd be fun.
That would be fun.
Yeah.
Would be cool. Yeah.
I'm an angel investor now. Did you know?
Oh yeah. What'd you invest in?
Nothing yet, but I'm going to.
Okay.
Bring me your pitches.
Well,
people.
I just had my first exit. Was it last year?
I know you both did.
Yeah.
Yeah.
Amazing stuff.
All right, guys. Well, let's go ahead and wrap this up. Thanks for hanging out with us so long. It's been an hour and a half. Hope you enjoyed it. Hope you got value from it. Any final thoughts or signing off words?
No. Thank you for joining us. Sorry. I looked down at the chat and I saw crypto said if I fart in a bathtub, and that just threw me off. I didn't even read the rest of it. I just threw me off completely.
Oh. Yeah, let me know how those edibles are, crypto. It sounds like pretty good, huh?
Anywho, no. Thank you for joining us. Always a pleasure. Give us a review if you can on Apple Podcasts, Spotify, wherever we are.
Yep. All those things. Go to wetalkmoney.com if you want to submit a question for the show. I know we've been doing these kind of live interactive, but we're going to get back to kind of regular questions probably next week. So
Awesome.
Yep.
yeah. All right.
Sweet.
Well, thanks for joining us.
Thank you guys.
We will see you guys next week. Have a good one. Take care.